following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. Be faithful to that which exists nowhere but inside yourself. Andre Gide. Market-wise, let's take a look at it out here. We had the Dow Industrials up 117, NASDAQ down 13, S&P's up 10.5, gold contract down $19, trading at $1,289 an ounce. Silver off 32 cents at $19.32 an ounce. Platinum off 20 bucks at $1,434 an ounce. Copper down 2 pennies at $3.05 a pound. Light sweet crude up $1.25 at $100.75 a barrel. Bonds, the 10-year up 6 ticks at 124.27. 30-year off 4 ticks at 135.31. King dollar up 139 ticks, trading out at 79.26. The euro down 15 at 139, and the yen up 22 at 101.91. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. Oh, baby, can you spell deviance? It's a beautiful thing, folks. Okay, so what do we have? This market is just dynamite, folks. This is what it is. It's amazing, actually. So, cash S&P. We get down to 1859. What does that do? Well, we come into the downdraft of April 28th. April 28th, we had a low out there of 1850. We got 1867. The high of the 28th is 1877.01. So what do we do again? Now, this is the third day in a row we did this. But I'm going to go through this real slow so you can see this correlation because it's really cool. So today what we did, folks, is that we did 736 million shares. Okay? Going into the 28th has 821 million shares. So you can see what has happened here. You came into that area, and we had an expansion of volume, okay, but it's going to need more to really break down that area. Yesterday, we had done 699. The day before, just about the same. So you can see you had a small expansion of volume. You get into it. It's just busting a little hole in it. That's what it's doing. Now, it rejected the price. It did have lighter volume. So what does that say? Guess what? That high of April 4th wants to get tested. That's what this comes down to. That's 1897.28. And if you were in front of a machine today and looking at the market, it was like, you got to be kidding me. That high is never going to get tested. Because what we did have is that when Janet Yellen came out with her speech, bottom line, market went south very quickly. Guess what? It rejected it very quickly. Bottom line, my take is that this high wants to be tested. It doesn't change the context that this market's going to fall apart, but guess what? That high wants to be tested first. Dow Industrials, what did the Dow do? Dow gets down to a price point of 16,357, rejects it, finishes out at 16,518. And what the Dow had done, this past Friday, the Dow had got within 30 points of the high. That high is going to get tested, which is the 16,631. NASDAQ Composite. Now, this is where it gets really cool because the composite has released a huge amount of information today. Huge. Okay, and this is what it is. The composite got down to a price point of 4021 and then come roaring back and closed only down 13 bucks. Okay? So, you know, when we take a look at that, you were down almost $60. We did. Now, this is where the information gets released. We did today 2.4 billion shares. So what is that? What did that do? Well, it went into the swing point of April 28th, and on April 28th we did 2.3 billion. So you can see what happened. We actually went in there with heavier volume, whacking it, boom, 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 hitting. What we also did is that we got into the high of April 15th. And that is the low point at this juncture. That's our low swing point. That low swing point, folks, had already taken out the February 5th swing point, with volume, by the way, okay? As we got into that high, guess what? We had higher volume. Okay, so what does that set up? What it sets up is this. It sets up two different things. First off, NASDAQ is also going to bounce. NASDAQ, you know, NASDAQ is a dead cat bounce, no doubt. The NASDAQ, the composite, we're at 4067. That can get into 4177, which was the high generated on the 24th. What the NASDAQ, the information the NASDAQ has released, though, is that we are pounding those lows. And I suspect, you know, the 4,000 wants to get taken out. And when that 4,000 gets taken out, we'll be at a 3,600 in a heartbeat. Heartbeat. That's how this is set up right now. We go over to the Russell 2000. We'll take it. Well, yeah, first off, let's go back to the SPY. I'm going to do the ETF structures so you can see how these are set up. The SPY. What the SPY did today, you did 103 million shares. That 103 million was going into 135. Rejected it. Guess what? It's going to go test. We're at 187.88. It wants to test the 189.70. That had 169 million. So your benchmark on the other side is going to be how we crawl up to that area. And I'd love to have that crawl happen on Friday. That's how I think this thing's going to set up, by the way. The 3 Qs. What do we have with the 3 Qs? What we have with the 3 Qs is this. They did 56 million shares today. That 56 was going into 58 million, which was the 28th, was going into 84 million, which was the 15th. That little baby, we're at 86.56. That wants to get into 88.21. Now, over to small caps. We take a look at the small caps. IWM, and the IWM had gone to 108.43. That took out the swing low of the 15th. We did 60 million shares versus 76 million. Bounce, boing. This one here, now this one here doesn't have to go up to the April 22nd area. I suspect what it's going to do is try to get into the May 2nd area, only 3 days away. That's how that's kind of set up. That also is pounding, but you can see that it's going to need more volume. And of course, the IWM has already basically did 100% move of a move. You know, we were basically at this level 6 months ago at 107.39. And we got to 108.43 today. Gold contract. Let's go take a look at gold. They were hammering gold out here today. We have what gold is this. She was down $18. She's at $12.90 right now. We're coming into a Thursday. She did expanded volume. She did 167 million contracts. So we're going to be coming into 167,000 contracts. We're coming into we're 1290. The last swing point out here is 1272. We had done 172,000 contracts and 189,000. You know, so we'll see how she tries to test those levels. If we look at the GLD correlation volume-wise, we did 8 million shares. She is coming into 8.7 million shares, and she's coming into 9.9. It's close. It's a close call. You know, that volume, I want to see that volume die down as it gets into the swing point. What does happen is that I absolutely like seeing volume come out before that swing. That's really crucial to understand. Oil market. Let's go take a look at oil. This is the third day in a row oil was trying to get to higher price. We did 268,000 contracts out here in oil. We are at 100.72, and she's coming into 283,000. So it's not bad. You know, she held over the price for the last couple of days. She can go test this 100.76, which is only 4 pennies higher. Bonds, the 10-year bond we had with the 10-year bond, she came in with some juice again. She's hanging right at the highs. She's building cause to basically take out this whole area. The area that we're talking about to take out is the 120, let's see, what do we have? 124.28, and we're at 124.26 right now. My take is that 10-year is a monster ABC structure on the way up. You stay right there, folks. This is Tom O'Brien. This is TFNN. We're going to be coming right back. We had the Dow Industrials finish up 117, NASDAQ down 13, S&P's up 10.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had American Express up $1.78. Exxon was up 44. You had Oxy up 40. Walmart was up 43. Big Blue is up 37. And a Tesla, TSLA. Let's go take a look at Tesla. Tesla had closed, folks, at 201. It had been down $5.93. That's down an additional $9 right now, trading at 192. And numbers go like this on Tesla. The estimate was 7 cents. They made 12 cents. Their gross margin, check this, that's pretty intense, man. The gross margin is 25.4%. Big numbers. They're on track to deliver 35,000 vehicles in 2014. Their first quarter revenue expects to be $713 million, and the Model S deliveries for the first quarter, 6,457. That being said and done, the bottom line is that they're whacking the stock. You're at 201. Tesla had a high out here at 265. I suspect we're going to make our way back to this 162 area. That's kind of how that's set up right now. SCTY, I think this is First Solar. So First Solar closed today at $47.71. This is trading right now up $2 at $49.73. Numbers go like this on First Solar. Their revenue is $63 million. It was up 112%. Their earnings per share, they had a loss of 82 cents. The estimated loss was 81 cents. Big deal. So that First Solar, look at this stock has been killed. Okay, so this stock is cut in half already. And it's just gone from 87 to 47. We pull this back, and oh yeah, she's making her way into 36. We take a look at GMCR, which is Green Mountain. It's Corey Green Mountain, that's right. That closed at $92. It was down $3. That's trading up $6 right now at $98. And this one's going to get really interesting. Don't bite on this, folks, because their full gap wasn't filled. The gap is at $80. It had come down to $90. Had light volume into the gap, but it's a lot higher right now. But she'll come right back down into that gap. Might take a month or whatever. So the estimate of Green Mountain was 94 cents. She's making $1.08. She's got some action underneath her, no doubt. Now, folks, let's go over to our man, Mr. Darrell Martin. Don't forget, folks, Darrell has an outstanding show right here at TFNN each and every trading day, 1 to 2 Eastern Standard Time. If you haven't test drove the Nadex platform yet, come over to our website at TFNN. You're going to see the banner on the top and on the side. Hit that banner. You can bring it up. You can test drive it right here, right now. They'll put $25,000 of funny money into your account. And let me tell you something, folks. Whether you're a bull or a bear today, it was a field day, okay? For trading in general, for Nadex in general, because guess what? Your trade is your stop. Darrell also has an amazing analyzer. Once you get the account up and going, you can test drive that analyzer right on TFNN. And don't forget, every Friday morning, 10 to 11, Darrell and myself are out here trading the Nadex product live. Darrell Martin, what's going on?
What's up, man? Yeah, we killed it on that last one, man, last Friday, no?
That was a trip, wasn't it?
Yeah,
that
like
was
a $10,000 trade.
That no doubt was a trip.
I had somebody calling later that day. He's like, I put up $80. That was Mike, and one of the listeners. And he called. He's like, I put up $80 and I made $920. And yeah, I mean, it was.
And what that was, folks, is that the gold was testing the lows, and basically the bottom line is that the swing high was 1302, and it rejected the low at 1272, and It couldn't have been scripted any better, man.
Oh, I know. And I went through it too. Like, so you went through it, and then I went through to get on my show later that day. So
Yes.
we're on the archives on Tiger TV.
Right.
And they can always check out shows. So if they missed the Bull Bear Binary Hour last week,
Yes.
or if they missed the Diagnostic Trading Hour like on Friday, they go back watch Friday's episodes.
Right.
And they can check it out. They can see the trade. They can see it as you called it. And then I went in through and I explained it even more.
Nice.
And I showed the magnet price. That's how I tested it, but it couldn't close below those lower magnet prices, kept closing up, and then
Yes.
popped up, started moving back up, and that's when the show came on, and we look at it, and like, it's going up, and I'm like, yep, it's going up, and boom, we just nail it.
And the way
So-
that gold is trading, I think we're going to have another shot at it Friday again.
Oh man, we had a triple dev day today, and I mean, I got Nasdaq up. I mean, it fell down a full DVA.
Oh, that
Perfect.
was amazing, man. Folks, if you were in front of a machine today, this market was so cool today, it's amazing. Because, you know, my take was that, yeah, the S&P, you know, basically still wants to test the high. And that's all I'm thinking of is a test. It'll spike it because it's driving everyone so crazy. But that NASDAQ came back was like, oh, my God, look at this thing come back, man. It was a trip, no doubt. Yeah.
Awesome. Yeah, it's and we went in. I mean, I don't even know if the chart's up right there, but you can. It dropped down, and the Nasdaq hit one deviation.
Okay.
The S&P is going to go up. It's going to do it, but it ran right back up to settlement. So I got it right up here on the screen. You can actually see how it came right down and goes right back up. So it lets you know where to start tightening your stops to take your profits. You know, that's the big thing. I always, if people go, oh, well, did I trade to that? And I'm like, well, you know, you can trade whatever way you want to, but you need to know when to stop adding on. You need to know when to start tightening up.
When it's stretched. There's no doubt.
Yeah.
That's what those deviations are all about, folks. And the deviations that Darryl has inside this analyzer, they're real-time deviations. This is not, you know, this is a real-time predicated on, you know, where these options are trading in the marketplace. So what the expected move is today, not, you know, tomorrow, not the next day, like right here, right now.
Exactly, yeah. We give you, like, basically, like, the next 24 hours, here's what's happening.
Right.
And we do it on every market. And whether it doesn't matter if you're, I mean, if you could be a Nadex trader, you could be just an S&P trader, a NASDAQ. You could be trading, you know, I think we do like 29 currency pairs now.
Yes.
You know, gold, oil, copper, corn, soybeans. We put it across the board. And so
it's important. And folks, just so you can understand this, we're not saying that the analyzer doesn't say whether you're going up or down, but the deviation absolutely does give you what the expected move is when you're going up or down, okay? And that's what Darryl's explaining. So it's so cool because guess what? When you're either in that trade, well, listen, you know, you can't expect that much more money when the numbers are already hit. If you're not in the trade and you think you're going to get in a trade at that point, it's insane to get in a trade at that point because your risk is going up dramatically compared to your reward. And then the other side of that is that when it's hitting the deviation point, if it's going up and you're a bear, well, that's when you want to sell it. If it's going down, you're a bull, that's when you want to buy it. That's what it's all about.
Yep, exactly. I got the S&P up right here. It drops down to half a deviation, but it actually went up half a deviation in the morning. Okay. So before Yellen's talking, the market's rising. The S&P is going up. All right?
Yes.
It moves up literally right to the tick right there to 0.5 deviations. Okay?
Yes.
Like positive up. Then it falls back down, crosses right through settlement as she's going. Nell's negative 0.5. So
that's interesting.
the whole move is one deviation from high to low.
Yes.
That's why I don't just give you the level.
Right.
I also give you the deviation amount so you can measure that high to low. You can see right here where it has like the green.
Yes.
And that little black line I got on my screen, that's one deviation from high to low. So we retraced from the high, one deviation. Boom, pops back up. All right, and here we are. Now we've moved up to one deviation retracement from the low. And notice the market just stops.
Yep.
And there's a little bounce. It comes back up to it, but, I mean, it's not something where you would have been adding on or to go shorter, adding on to go long.
No doubt. Listen, folks, each and every trading day right here at TFNN, don't forget, you can get all the programming right on your cell phone, tfnn.mobi. You can listen to our man, Darryl Martin, 1 to 2 Eastern Standard Times. Darryl, have a great day, safe day. Look forward to the show tomorrow. Coming right back, folks. You stay right there.
See you then.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finish up 117. NASDAQ was down 13. S&Ps were up 10.5. And, folks, you know, if you ever happen to be, you know, visiting the Clearwater area, all you folks that are in Clearwater, St. Pete, Tampa, Pinellas County, if you're looking to have a great color job, get a great haircut, all of the above, Salon Gaboa. Salon Gaboa is downtown Clearwater, folks. It's a great salon. You could ask for Bridget at Salon Gaboa. Emily will answer the phone. Talk to Emily. She is absolutely awesome. And if you are down here and you're looking for a great deal on cars, okay, go to cars2rent.us. There's a huge amount of affordable cars. The lady, her name is Angie. She's right in our building. Check it out. You're going to really like it. So it's Salon Gaboa, and it's cars2rent.us. Let's go to, let's see, where am I? Let's go to Mark in Fort Collins. Hey, Mark, what's going on?
Hey, Tom, how you doing today?
I'm doing great, man. How you been?
Great.
Good, man. Good to hear from you.
You too. It's been a little while.
Yeah. So what are we going to look at?
So I'll tell you what I did, and you can tell me what your thoughts are.
Okay.
I was watching Amazon on a 10-day, 10-minute chart.
Okay.
And it had a pretty big volume low at 288 on the 28th at about.
I see it. I got it. Okay.
1.8 million.
Yeah. Look at that. Okay.
Came down and tagged. It actually went under it.
Wow.
At 10:10 this morning on 319,000.
Yeah.
And I was going to play it there, but because it closed under it, I didn't want to go yet.
Okay.
Then I saw it come down again and tag 288 at 2 o'clock.
Look at that, man.
102,000. So I grabbed some. I went out 2 weeks, or actually a week and a half, and grabbed some 295 calls.
Man, what a trade. What a trick. No, this is cool, man. This is cool. I get this up on Tiger TV. If you're watching Tiger TV, folks, look at that. Okay, I got it. Go ahead.
Okay, so now I bought 5 of them.
Yeah.
I'm already up about 40% on them.
Yes.
And I don't want to be a pig, but I'm looking to probably get out of these at least sell half on a double, which I think I can get if this thing gets up into the high twos, low 300s.
Right, which is 298. I mean, it's going to go for 298 probably tomorrow.
Right.
Yeah. And
okay.
That's so cool, man. So what he has here, folks, if you're in your car and you're not watching Tiger TV, what he did, and as he explained it, there was a huge down bar on the 28th of April. And it was a monster. And it came into it with so much lighter volume. And the key, what you did do, which is really cool, man, is that that second and third test, man. These tests is a whole different ballgame. And, of course, Amazon has come down so dramatically that, so on the daily, yeah, this is so cool, man, because, nothing is down forever, nothing goes up. I mean, the larger pictures that, it wants to go lower, the smaller picture is that it's going to go attack 302 to 316, man. Yeah,
okay.
You get action.
Yeah, because on the daily it tested 14 million with less than 7.
Yeah, exactly. So when we went to 286, the swing point was 288. You did 6.9 million shares versus 14.4. It's like, okay, you dried up for a certain amount, and yeah, man. Hey, you can. Even 315 is game. You know what you can do? I know you know this, but on those options, right, you can throw what will happen is this. So picture this, folks. When these were going down, because they're going down, he's buying calls, they were cheap compared to what they should be. When this thing starts rocketing up, they're going to put so much premium in these so quick, Mark, it's going to be insane, okay?
Right.
So, I mean, you can throw a couple bid offers out there, as soon as the market opens, man, and, then rearrange them after that point. But you just don't know the way Amazon can trade. It can get a spike. I mean, Amazon, can go up $10 in a heartbeat, man, especially after it's already down $100 and something.
Yeah, they were giving these suckers away. I think I grabbed the 5 of them at like 390 when it was trading down there, and then it started.
That's amazing, man. That is so cool.
Yeah. All right. Well, good. Well,
cooking, brother.
I've learned to do some of this stuff, so I appreciate it.
Listen, man, I love it when you're flying like an eagle like that. But that one there is amazing. What happens, folks, is this. He saw it, and that's where doing the work ahead of time is absolutely crucial. But you know that when you come into something that's that dramatically lower the volume, you're going to get the bounce, and you went into the right deal, no doubt, going into the option. Cooking, brother.
All right, thanks, man.
Have a great one, man. Have a safe one. Let's go to Caucus. Costas.
Hello.
Costas, what's happening, brother?
Hi, Tommy. How are you?
I'm doing great. How you been?
I've been good. Haven't called in a while.
I love hearing that voice of yours, man. Hey, I was having a tough time. My producer and myself, we went to the same school of spelling. We both don't know how to spell.
No problem.
That's all right.
I'm along the China Fund. How's it look to you?
China Fund. So, the FXE?
No.
No.
CHN.
Say it again. F?
CHN.
CHN. Okay, so let's take a look. The China Fund, okay, closed-in diversified management fund, the low, okay, 16, the high's 21. Okay, so let me put this on a weekly for a second. So, $19.58. Interesting. Costas, there's no, right now, it doesn't have, like the last spike high up here was January 3rd, okay?
Yes.
And the volume's not there. It's 336,000. So on the way down, however, it's solid at 1870. So it's like the closer you get to 1870, the better off you're going to be. But you know how this thing goes. I like to see volume at the high, too.
Right.
Oh, I see what you're looking at, though. I see what you see. Okay, so you see 2083. I see what you're looking at from December 20th. I let it soak into this 1870 area. Now, where I'm getting at from the December 21st of 2012. You put a line coming across there. That's where it shouldn't break that area.
Okay, thank you very much.
Okay, Costa, it's great talking to you, man. Have a great one. Have a safe one. Let's go to Larry in Dallas. Hey, Larry, what's going on?
Hey, Tom, how are you today?
I'm doing great. You having a good day?
I am.
Cool,
man.
man.
Would you take a look at Chewy's, C-H-U-Y?
Chewy's. Let's see. Full-service restaurant concept, authentic Mexican food, Texas, Alabama, Indiana, Kentucky. The low is 29. The high is 44. Okay, so this got hammered today. You don't buy this. Don't buy this yet.
Well, that's what I'm looking for. Where would you think my entry should be?
Okay, so watch what you have here. Now, what this did today is that it broke the whole top that has been out there since June of 2013.
I saw that.
And this is going to be a break on volume because we're only 3 days into it right now, right? And thus far, we've already done 1 million shares. The swing point was 700,000. So on a pricing perspective, you can take the low, then you take the high. The low of today, which is the 31. You take the high, which is 44, and you take 13 away from 31. This is going to be a price. This is a big top, man. Let me pull this back a bit. 1 second. Yeah, it's an IPO. Don't touch this thing, man. Okay, so watch what you're going to have now. $22. And at $22, man, that's where this is it's gonna make its way into this $22. First, it'll hit the $30 level, and then $22, man. And this is something that you're gonna probably want because this is what you have. The high that was established at 43.40 will get tested again, but you just came off that with way too much volume, man. So it's one of those deals to just keep your hands in your pocket until it gets down there, and your confirmation is that you're gonna see it continue lower, and you'll see the volume continue to not necessarily expand of today, but on a weekly basis, it'll be expanding.
That's great, Tom. Thank you so much. Have a great day.
Have a great one, man. Have a safe one. Let's go over to Germany. We get Tom from Germany. Hey, Tom, what's going on?
Hi, I'm doing good. How about yourself?
I'm doing great, man. Thanks for calling. Appreciate it.
I tell you, I have a question because I am short the underlying stock of LinkedIn.
Okay.
But I just heard and watched Amazon.
Yes.
In terms of the call, do you think it might be worth going on the call option, also going for LinkedIn, or is that really more of a dead duck than even Amazon?
Let's see. Yeah, you stay right there for just like 3 minutes, Tom. We'll bisect and dissect this baby for you, okay?
Great.
Awesome, man. Just stay. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. You stay right there, folks. We're coming right back. We had the Dow finish up 117. NASDAQ was down 13. S&Ps are up 10. We're going to right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We're talking with Tom from Germany. We're talking about LinkedIn. Okay, so you shot the underlying, and you're figuring you just were looking to play a bounce, right? That's what you're talking about here?
Just to play a bounce, right? Because I still see downside. I'm wondering if you agree to LinkedIn. If we go way back when, about a year and a half.
Yeah, no, I do. I mean, the way LinkedIn is at right now. So what has happened is that it got into the bar from, let's see, February of 2013. The top of that bar is 169. The bottom is 122. So 122 is game. Then when you go over to the last time that had any volume, real volume, it's 120.63. So that's the longer-term deal on LinkedIn. That's where it wants to go. So the shorter term is, let's see, so we did 5.7 million today. You're at 143.37, and the range is 143.26. So you're 10 cents inside it. Well, I just looked at some of the options, and 164. So LinkedIn can bounce to 157 to 164. And right now, a 145, 140 would be $6. A 145 would be $4. That means you need 150. It's hard to tell. If you're going to do it, I would not go out far. You know what I mean? If you're going to do it, what month? Let's see, what Friday we're in. This is going to be the first Friday, so you need 3 more Fridays. I'd stay tight. Stay tight into the marketplace. They're not that expensive. The same thing has happened on LinkedIn. Compared to how LinkedIn can move. The calls aren't expensive right now. Do you trade options a lot?
No, I'm usually in the underlying equity, and I'd like to stay short, but if there's a reasonable opportunity on the option side, I don't want to sell the shares, but Alibaba's coming, there might be a bit of interest in the entire sector.
Yeah, no, I'm with you.
Rejuvenated, and
right.
I was wondering if it's worth a small trade on the option side.
Well, you have to figure out, you have, right now the 145s would cost you $4. So you got to figure that's 149. You got to figure, in order to break even. You know what I'm saying?
Mm-hmm.
And I would say that, yeah, you can get a retest of 164 pretty quick. And that's just a dead cat bounce. That's all it is. So the way I do that correlation, so if you got 164, you got to figure out that do you want to match it up, meaning, and go delta neutral. See, that's another way of looking at it. So do you have 100 shares? How many shares do you have shot?
I got 90 shares.
Okay, 90 shares. Sorry. Okay, so the way it would go is that you'd have to get one contract, okay? So one contract is 100 shares. So you'd be net shot 10 shares, okay? There's 2 different ways you can look at this. you can look at that $4 is paying you insurance, right? That's one way of looking at it, and that's basically what you've just done with $4 for 2.5 weeks. Is you've locked in your profit at 149, and you're at 144 right now. Okay, that's one way of looking at it.
The short one in at about 185, 186.
Yeah, which is beautiful. So you're going delta neutral, okay? That's going to give you 5. That's 40. That's 30. That's $36 of profit. So if you just put the trade on for $4, you're locked in with $36 worth of profit, no matter what happens. Okay, because you could delta neutral means that you basically have really closed out the trade, but you've done it in the option market. So that means that no matter how far it goes up, if you close out both of them at the same time, you're just matching it up. That's one way of looking at it. Then the other way, if you let that thing go beyond 149, which he's saying, okay, we go up to 164, then what would end up happening is that you're making $15 on the option, which is really nice money because you're paying I think it's $4.45, and then you're still shot at 185. You've made the $15. Then you got to look at it and say, okay, did it come into it with volume, no volume, whatever. So those are, I would put your choices down on paper and see, what you're looking at and what you want to do. Risk reward.
That makes sense. So it's actually adding a risk management tool to the whole trade.
Oh, it's a great risk management tool, particularly because you're in a beautiful situation right now. You're in a good situation. It's come down. You're not looking for a huge bounce. You know what I'm saying? And this is, the call part of it, let me just see something. The VIX is still really low, and what has happened because of that, folks, okay, the option pricing, this will go up pretty quick. But no, the VIX is still low. It's even better. The VIX went down today because the market came back so dramatically. So that's a good trade, man. That's a good trade, because you're not paying, the premiums aren't there. When this thing turns, meaning that the premiums will come back in, but right now you're in good shape.
Okay, thank you. Thank you much.
Okay. Hey, now you live in Germany. How'd you find us?
Oh, I've talked to you a few times in the past. I'm the guy with the Middle Beast stock way back when.
Yeah, okay, cool, man. I love it. I love it. Okay, man, well, listen, you have a great one, a safe one. We appreciate you growling and prowling out here with us.
Okay, thanks. Take care.
Okay, thanks. Bye-bye. Bonds out here, folks, okay, this 10-year is still screaming. Now, see, the amazing part about this whole market right now, folks, is that high wants to get tested. The frustration is there. All of it's there. We've been at the same level, going all the way back to March 1st. All right, so March, April, and we're dealing with on our third month right now. And how this gets tested is going to be the name of the game. And just as Mark from Fort Collins had done the work on Amazon, folks, you should be doing the work on the S&P, understanding what your volume characteristic is at the top, because this is what the volume characteristic is. If we just take a look at the SPY, we're dealing with 169 million shares. So the correlation is, number one, when you go into a high like that, are you going to go in with heavier volume or lighter volume? Thus far, every time we're up there, it fails. Every time we're going back down, we have high volume spikes on the way down. So that's saying that, hey, guess what? It doesn't want to go down. The key is the 169 million. You go in and up over that, like with 100, you fail. Oh, baby. Then get out of the way. It's Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We did now finish up 117, NASDAQ down 13.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.
following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, Tom. You really assemble a stable of amazing people. I mean, they all have different strengths, different areas. And,
yeah.
Man, each one is a superstar in their own way. I've seen it over the years.
Well, listen, man, we appreciate you being out there growling a problem with us. If you guys and ladies and tigresses weren't out there, folks, we would have zero.
Yeah, it's unique, and it's and it goes back to your basic belief of an open platform, which I've heard you say that years ago.
Right.
And it's really bearing fruit now, I would say.
Yeah, I agree. It is.
Yeah.
Cooking, brother.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. Always have a plan and believe in it. Nothing good happens by accident. Chuck Knox. Market-wise, let's take a look at it out here. We had the Dow Industrials up 117, NASDAQ down 13, S&P's up 10. And folks, when I do those numbers, these numbers don't justify what happened out here today. Why? Because all these markets were down when Yellen was out speaking this morning. And guess what? They all want to roar back. They want to roar back to do what? If we take a look at the Dow Industrials, what's happening? We're at 16,518. That high wants to be tested from the 4th. That's 16,631. So you're only, 120 points away from it. We had got up to 620 last Friday. This baby is going to go after it. We'll see whether it can handle that high. That's where it wants to go. We'll take a look at the cash S&P. Same setup with the cash S&P. Cash S&P today got down to 1867. Rejected lower price once again. Had lighter volume. The high of 1897 wants to be tested. Now, what we did do is this. The volume was 736 million. Volume yesterday was 699. So you had a slight expansion with volume. But we were coming into the 28th, and that had 821 million. So you had a slight expansion of yesterday, not enough from the 28th, but what does that do? That's building cause. There's building cause to go downtown. Your correlation on that will be how we go into that high of the 4th. That's the, you push one correlation, meaning the lows, against the highs. I do expect, the way this is set up right now, it's like, Friday would be for a bear, Friday would be the ultimate day for it to go test. For a bull, what you'd want is that you either want to go blow that baby away tomorrow, or you get up right next to it tomorrow and Friday, and then it has a whole weekend to sleep, and then next week it blows it away. That's kind of how the setup would be. Thus far, what has happened is that each and every time we're up into those levels, the volume dies in the vine. NASDAQ Composite. Now, the NASDAQ Composite released a huge amount of information out here. We got down, and we were down at 4021. We closed up 4067. So bottom line is that you came up an additional 47 points, and you only end up being down 13 points, which is nothing. The NASDAQ, however, did 2.4 billion shares. So we had an expansion of volume. That says, number one, you're going to be back down here. You did have a rejection of price. What the NASDAQ is doing, the NASDAQ is basically hammering away at the February 5th swing low. So the NASDAQ, we're at 4067. I expect you're going to see this bounce to 4177. And then guess what? Then you're going to 3600. So it's pretty intense what's happening out here. We take a look at the Russell 2000. Russell 2000 came in. It broke the swing point of the 15th of April. It came into the, 1093. Yeah, it came into the high of February 5th. You got to remember, February 5th is the benchmark here. Rejected it. Had slightly lighter volume. The small caps are set up to really take a monster hit. The small caps are set up, so you take the bottom of that, which is 1,082. You take the top of that, which is 1,212. So you get what? That's 140 points. You take that off. That's 840. Let me just see what 840 is on this. Put this back. Yeah, so this is pretty cool. So the way, man, this is filling in pretty good. Okay, so the way the small caps are set up, folks, they're set up to go back to the highs of, first off, 07, which is 856, as well as that's when they broke topside January 13th. So check this out. This is going to be amazing if this is how this plays out. Because the way technically they were set up right now is that all of 2013, the market did one thing, go up, period. What this is saying is that, guess what? It wants to come back to that level. And we'll see, you know, what you have here is this. You penetrate that level. If you get into that 866, then you get some big problems. Because then you go back to the 2011 deal, which is 601, which, you know, well, 666? 601. That would be pretty intense because that would be almost a 50% retracement or 40% retracement in the small caps. We take a look at the, since that was set up that way, let's go over to the composite for a second and look at this composite. So if we look at the composite right now, yeah, the composite's certainly not set up to go to 2,800 right now. 3,600 the composite's set up to go to. You know, we'll see how it handles the 3,600 out here. Gold contract, they were pushing gold around out here today. Gold came back $18.90. We did do 167,000 contracts. That's saying that this Friday, it's going to be a tough Friday because you swing low out here in gold is 1268.40. We have a second swing at 1272. Now, both of those areas do have some good volume. So, but, you know, when we're coming into a Thursday or Friday, they're going to go after this. We're going to have some nice volatility. What we do have happening is this, is that because normally, folks, summer trading starts May 30th. I think we're actually already in it from how it was trading last Friday. And the reason being, of course, is that the whole Northeast, the weather has been so terrible that I suspect folks, if they see any bright sunshine, any blue sky whatsoever on Friday, meaning all these trading desks, they're going to be out of there. We'll find out this Friday. Last Friday was slow. That's what happened. I suspect we're going to see the same thing. Now, if that's what you have happen, it will definitely start right by May 30th, a little before that. Then what ends up happening is this, is that every Friday, every Monday, you're going to be cognizant of where the market is, where the volumes are coming into, because if you are a bull, the last thing that you want to see is going into high prices and on a Friday and volume is dying on the vine. If you're a bear, the last thing you want to see is going into low prices and volume is dying on the vine. Because what happens is that that's going to be a meter turn in the marketplace. That's how these things shake out. Silver. Let's go take a look at the silver market, SIN4. What we have with silver is that silver did 43,000 contracts. Okay, so now I like this. So check this out. This is good. So what silver did is this. Silver got first to a price point of 1977. The last swing point was 1974. We did volume of 43,000 contracts. So what that actually did is that it got into a swing with higher volume, then gave it up in price. That's okay. That's really okay. Oh, man, this deviant. I like it. I like it. Deviance. So silver can still come back down to the 1925, even hit the swing point, but it's going to be a buy. Now, silver, what silver has just done for us is released a huge amount of information like the NASDAQ did, the composite did. Let's go over and take a look at the dollar index, because what we have with dollar, and see, the dollar was screaming yesterday, too. It's so weird, man, because the dollar, well, both the dollar and gold was screaming yesterday. And what it was is that the dollar got smoked yesterday. You know, the dollar was down 400 ticks. What we were doing, we're going into the last swing point from October of 2013. That swing point was 79.06. We got down to a price point of 79.09. Now, you're still there, okay, but it looks like it's kicking out of there again. With that type of move downtown, the gold contract did not move uptown like it should have. And, of course, what that's still saying is that, guess what, this dollar wants to move uptown. What I do expect, even look at the silver, well, we'll find out. But what I do expect looking at the silver is that the gold contract may spike, but it will hold those levels. After the close out here, Tesla come out with numbers. Tesla closed at 201. She's trading down $15 right now. She was down $5.93 earlier. Tesla, folks, is on her way down to the 162 mark. And right now, we're still at 185. You stay right there. This is Tom O'Brien. It's just TFNN. We had the Dow finish up 117. NASDAQ down 13. S&P's up 10. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 117, NASDAQ down 13, S&P's up 10. As we do each and every Wednesday at 20 past the second hour, we have our man, Mr. John Logan. And, folks, each and every trading day, 8 a.m. Eastern Standard Time. Come over to TFNN, and you're going to see right on the front page, on the right-hand side, it says free daily video. Click here. What John does each and every trading day, he puts a video, a market research video up, his TAS profile market research video. Some days, today was the S&P. Some days there's currency. Sometimes there's commodities, the gold contract, the yen, the dollar, the pound. As I said, today was the S&P. They're amazing videos. He's using market profile to explain where he has either unfair lows or unfair highs and where the market is right in real time. Now, as you're over there, you go to the right-hand side of TFNN. So, on the left-hand side, rather. And what you're going to see is that it says, try the TAS box available at TFNN. Now, the TAS signal box has not only the commodities, the indices, and the currencies inside it, but what John has just added is the S&P 100. So if you trade in any of those stocks, which you are trading all of those stocks, if you don't know it, you are. I have a crystal. No, you are, folks, okay? They're dynamite stocks. Well, guess what? Inside the TAS signal box right now, though, you can put those equities up. Exact same type of software. It's phenomenal software. John Logan, what's going on? How you doing, John? I almost got you. I got you.
Hello?
I got you.
Okay.
How you doing, man?
Hear your voice again. I'm looking forward to seeing you this week.
I know. I can't wait, man. Absolutely.
Hope you don't take all my money on the golf course.
I don't think so. I think you'll be taking mine.
How's the let's talk about what we talked about in the video day on the S&Ps.
Yeah, I know, man. Let me tell you something. The first thing this morning, I watched that video, man, and you know what? And you know, it blows my mind too, John. No, let's talk about that because it's like, man, you know, I'm looking for a test of this high, and even when the market was falling apart today, I'm saying to myself, man, okay, I guess I'm not going to get the test, man.
Yeah, it was. What we talked about in the video day was, we talked about levels, as you know, and inflection points, and that's really, in my opinion, where you can really leverage the probabilities in your favor and
yes.
Put that risk-reward scenario always a lot higher than 2-to-1 most of the time.
Right.
Which is what any trader looks for. We had what we talked about was a great trade for about an hour, and then all of a sudden, the savior comes on the TV. I was watching it when it happened. I was like, oh God. There's no telling what the technicals say right now, and you almost got to be out of the market when that girl starts yapping her mouth. I mean, it's just.
Well, I agree, and the good thing though is and when you watch the video, folks, you can watch the video is going to be up there all night, so please go watch it, because inside what John was doing, there was the divergence there. Do you know what I mean? Which is really cool, man. There's no doubt, and and I absolutely agree with the aspect that. Hey, listen, man, when you can get, 16 S&P points in 10 minutes, I mean, you trade them, I trade them, you know that, hey, you're going to bring your stop down anyway, so.
It's difficult to hold anything when you got that kind of newsworthy event on the tape there, but before, we're trading levels, obviously, and we broke through that 240 support, and you just have to take that trade because we're biased towards the short side of when we can because of those divergences we saw. Now, we just turned in that direction, like in the last couple of weeks, Tom, as you know.
Yes.
we've been stupid like everybody, buy the dip, buy the dip, buy the dip. There's no reason to really not do that.
Right.
But lately we the worm turned a little bit. And another thing that was kind of a factor in that process was, if the dollar's, we talked about this last week, if the dollar's kind of sitting in scary areas, and then we talked about a possible flush and then maybe a reversal in the dollar last week, and that obviously that possible flush has happened. That to me, if I'm an investor and I'm looking around and on an institutional desk, we deal with those guys a lot of times. I mean, the word I was hearing, fundamentally speaking, was that's a scary situation.
Yes.
The dollar's starting to cave in. I mean, that's a confidence issue.
Right.
And gold. There's so many disconnects in markets now. I mean, gold should have, good Lord. I mean, that should have rallied.
Oh, it should have went to the moon yesterday. I know. Totally.
And that gave you a lead in on that, like, hey, it poked its head up as a not very worthy gold long. So that kind of made it even a better short actually. But I mean, the dollar getting hit like that, we talked about last week, and the euros and the British pounds of the world rallying against it. I mean, the 10 years on the highs again. I mean, like, there's a lot of disconnects there. So we have to trade technicals, and we had an opportunity today that made 10 or 15 points really quick. But I didn't take off all my trade, but I should have.
Hey, let me ask you something, because what was really cool that I hadn't seen. Well, I still don't understand it clearly, but that's why I'd like it. The navigator, okay? So when you're watching this video, folks, okay, John brings up the navigator and what's going on, and when you see it, it's so clear. So I was looking at that and saying, oh, man, this is interesting. It was the first time you could see it underneath. So what is the navigator? What is that tool in correlation to the profiles?
Yeah, the navigator really gives us some biased opinions around the inflection points. It's something I use a lot, and I love to use it on a long-term basis to kind of get an idea of, if we can eliminate the short side or eliminate the long side from our trading plan. That just kind of, it really helps you out mentally. It does me. So when I look at navigator and I see those divergences happening,
okay,
it's not saying, hey, jump on the shorts. It's just saying all longs have to be looked at in a suspect manner now.
Okay.
And that's kind of the way we look at it. We also use navigator to scale out of trades. The ES, last time we had a big weekly candle down, we had a magenta bar on navigator, which told us that we were getting extended, so it might not be a bad idea to take some profits on some legs down like that. But
okay.
Navigator really, we talked about it in our we went to Denver this past week. We talked about Navigator a lot in a seminar we did.
Yes.
And you strictly can trade off Navigator alone. It's an all-in-one tool, and it fits on the bottom of our charts. If you watch the videos every day, you'll really see how I use it.
No, you will. No, particularly today, I said, oh man, hold it. I see exactly what you're talking about. How that divergence was coming in, and it's kind of it's starting to stick out there. More so, I guess not stick out in the weekly yet, but it's starting to stick out, isn't it? I mean, it's...
Well, we've got two time frames, weekly and daily, that I look at a lot, and I'm not necessarily a long-term trader. I mean, if I had to hold IBM for 3 days, I'd probably crap my pants. I'm not a long-term stock investor. But to have really high probability trade setups happen, I really try to maximize the value of the weekly and the daily setups to try to get leverage intraday or even over time. So I mean, I hear you music. That's really what I look at personally when you talk about the videos.
Totally. Listen, look forward to seeing you Monday, man.
I'll be there.
Okay, have a great one. Have a safe one. You stay right there, folks. We're coming right back.
Okay, Tom.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had, let's see, Marvell was up 27 cents. You had ExxonMobil up 44. Citigroup was up 34. Procter & Gamble was up 97. Alibaba yesterday did file for their IPO. It's going to be a couple months. And, of course, there's going to be a lot of bread made on it. I'm sure you probably heard Yahoo. They own 24% of it, how much they're going to make, and it's big numbers. But the biggest winner, folks, okay, out of this is basically the guy's name is Son, S-O-N, out of Japan. And this is amazing. So check this out. This guy owns Sprint right now anyway. But this is just an amazing story. This guy in the 90s flat out was buying just about every, not IPO, but as a venture capitalist, okay? He was funding huge amounts of companies all over the place, all tech companies, of course. And guess what? You talk about hitting the jackpot many times. Well, this one here is the ultimate. With Alibaba Group filing to go public, the biggest winner won't be Jack Ma, who is the founder, or the venture capital backers like Silver Lake Management. It'll be Japan's Masayoshi Son. 14 years ago, Sun SoftBank, this is the guy that runs SoftBank, started with a $20 million bet on a then unknown portal connecting Chinese manufacturers with overseas buyers. The site evolved into China's biggest internet shopping mall, and SoftBank's stake is now estimated to be worth, so check it out, $58 billion. 58 billion. 20 million into 58 billion. It's pretty amazing. And of course, it's saying that this is going to basically put his reputation as one of the world's most savviest investors, period. So check this out. Check out how many deals this guy has got into, though. The 56-year-old also created a venture capital with investments in more than 1,300 technology businesses. They include Yahoo Japan, Zynga. Let's see. Then he's got Farmville, Mafia Wars, Gun-Ho Online Entertainment, Cheeseburger Network, BuzzFeed. Bottom line is that it's just you talk about an amazing return on equity, though. That's about as intense as I've ever heard. There's no two ways about it. Now let's go over to Zillow. Zillow today, folks. Zillow, first off, that is the e-commerce real estate site. They provide information about homes, real estate listings. They make their money through advertisements from the broker dealer. Well, not the broker dealer, the real estate professional, the mortgages, the banks. The low for the year is $48. The high is $111. This was down 10% today prior to them coming out with numbers. They closed at $93.63. They were down $9. Right now, the stock is trading up 3, okay, at 97, which is not the end of the world. Big volume on the way down today, though, 5.7 million. Well, let's go through these numbers, and what you're going to see in the numbers is this, okay? So the estimate was they were coming in with an 8-cent loss. They ended up coming in with a 2-cent profit. The estimate, that's bottom line. Top line, the estimate was 63 million. They come in with 66. So they did 5% more gross revenue to the bottom line. They hit it. That's what that comes down to. They are seeing that, let's see, the second quarter revenue, they see that's going to come in above forecast. The year-end estimate was 293 million. They're going to do 304 million to 308 million. Okay, so now let's look at the stock, okay, because this is going to be really cool. This very well could be an equity that you want to wrap your head around, folks, but do not buy it yet, okay? So let me show you what's going on here. We came down today with big volume. Well, first off, you made a high with light volume. We made a high on the daily, 111. That was high was generated last week. It only did for 2.4 million. Today we came down at 5.7. Now, it didn't break a swing point. Okay, so now you're going to get a little bounce in the marketplace because we know it's bouncing $3 or $4 after the close. Numbers come in good. So that'll get a bounce going. If we put this back, first on a weekly, I'll put it on a 2-year weekly. On a 2-year weekly, what you're going to see is this. This is a monster ABC up, by the way. That's what I'm going to walk you through here, but it's not a buy just yet. But what's so cool about this one, it's a complex ABC up. And what complex ABC up means is that it already broke higher, has volume, has all the characteristics. Then it's going to come back inside the range again. And I'll show you what you do when you come back inside the range. So the range, the B point on this was $100, $103. We broke that, and you broke it with conviction. We broke it on the 25th. Yeah, I get a weekly up. Okay, we broke it on the 25th with 12 million shares. You went higher on 13 million shares. Your characteristic was 13.5 million, and bottom line is that you took it out, 13.8. Okay, so that's on the weekly. On the daily, it has it. On the monthly, it has it. Now what has happened is it comes back inside the range. So what do? I turn this and put this on a monthly. Now watch what this is on a monthly. This is a monster. On a monthly, folks, the A point on this is $23. Your B point is 103. So it's an 80 point A to B. Your C point is 70. So you have a price target of 150. Okay? What it did last month, it breaks it with conviction. We go from $84 to 110. We do 50 million shares. You take out the 35 million. So now let's talk about a complex ABC, what it means. Okay, so you're back inside it. Now we're coming back inside it. The volume's not bad. You know, extension of volume, but not too heavy. So the real key is going to be, okay, where's it go? Well, when you can't bust them up, guess what? You're going to bust them down. So what you're going to want to be looking for is this. As this baby starts backing into $71, it can get into 71. It can even, you know, $71 to $79. You back down there on a monthly basis, like less than 26 million shares, you're going to want to be all over it because you have two different trades here. The first trade would be 71 up to the high of 110. That's the first one. The second one is the larger one, which is 79 to $1.50. So keep your eye on this because this is a really sweet setup, and don't just buy it blindly. It's going to go test that lowest swing point, you know, because the people basically, you know, they were selling it today, and, you know, fundamentally number-wise, they're decent numbers. But just like anything else, this market, you know, now I'm combining, well, first off, that came down on volume, so it wants to go lower. Your confirmation that it wants to go lower is that when it bounces tomorrow, you'll see it bounce on light volume. You get that, guess what? It's going to be a small ABC structure down inside a much larger ABC structure on the way up. And you got to remember, so you have an ABC, whether it's on the daily, weekly, monthly. The monthlies take a lot longer to play in, but the risk versus the reward on that equity, letting that pull back another $20 goes up dramatically. 877-927-6648. Tesla, as we said, that came out with their TSLA. Now, Tesla made their numbers. What is happening, I suspect, is Tesla did not sell as many the Series 8s, I believe, okay? That is their high-end car. It's a gorgeous car, and I think that's what's going on. So Tesla was down $593. It's down an additional $15, and it wants to go a lot lower, by the way. It's down an additional $185, but the last time it's had any juice inside it was at the 120, well, 162. The 162's game next. Now, if we put this on a, oh, this is going to be trouble. Hey, this is going to be trouble. So check this out, folks. There's going to be trouble in paradise here. Ooh, this is interesting. So watch. Okay, so 185. It's trading at 185. 181, folks, is something to watch, because if it gets back inside the 181, then you know, we had that downdraft last year where the equity went from $194 down to $116 in 2 months, and then it only took 2 months to get right back topside, and then after that 2 months it went an additional $100 topside. So on the way back down, you have 181. You get into 181, then it'll go to the bottom of that deal. Let's go to Danny in Atlanta. Hey, Danny, what's going on?
Hey, we had a perfect weather day today. It was stunning.
It's about time, right?
Yeah, we have a nice spring and a nice fall.
Perfect, man.
The year you can have.
That's good.
Can we look at silver wheaten?
Let's take a look. We get silver wheat. Now, silver wheaten, folks, is one of the largest brokers of silver in the world. The low 17, the high's 29. Okay, so we get into the swing out here today. 21.37. We go to 21.50. 3.1 versus 3.1. Oh, what a trip. You stay right there, Danny. We'll come back. We'll bisect and dissect that silver market. 877-927-6648. You stay right there, folks. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. We're talking with Danny from Atlanta. We're talking about SLW, which is Silver Wheaton, which is a silver broker. So we did $3.1 million. You come into that swing point with $3.1. Now, do you own this? You're looking to bite, Danny.
I'm looking to bite.
Yeah.
Also, we don't have any charts in the den for some reason.
Yeah, we understand that. We can't get in the den. We can't get in our own den right now. They're
That is funny.
They're fixing it, though.
All right.
Yeah. I wouldn't bite yet, and this is why. You don't want to go into a swing point with the same amount of volume, which this did. So silver itself, the contract, I like what the contract did today. Well, I don't like what the contract did, but when I say versus gold versus silver, what the silver contract did is that we got to a higher high. It had the volume behind the move, meaning, we did 43,000 contracts. It didn't hold price. Now, when that happens, we got to a price point out here today of 1977. You did 43,000 contracts. That's good. That's saying you're going to be back up there, but it looks to me like first, Thursday, Friday, bottom line is that is saying that, okay, we're going to be basically coming down to 1925, and guess what? It could basically try to spike into this 1890 area again, And when you take a look at the other silver stocks, if I pay PAAS, Hecla, they're coming down with some juice. So I wouldn't bite just yet. I would make that SLW reject lower price on lighter volume, not the same amount of volume which we had today. And just so you know, also, you can just tell everyone in the den, you just hit Tiger TV and they can see the charts. I'm sure they are, but.
Okay, great. Can we look at another one real quick?
Sure.
It's URZ, a uranium stock, Uniform Romeo Zulu.
Yeah, let's take a look at it. You get URZ. Okay, so the low here is 80 cents. The high is 197. Yeah, don't touch this thing, man.
Yeah, I know, but where would where would it get into?
What you have here, folks, is they did 1 million shares today. You busted the swings. You're at 130. You went to 117, so that busted that. Okay, let's pull this back. Yeah, I wouldn't touch this stock, period.
Okay.
Yeah. Have a great one, man. Have a safe one. Let's go to Kim in Denver. Hey, Kim, what's going on?
Fine, Tommy. How are you?
I'm doing great, man. Great to talk with you.
Yeah, same here. I called you a couple of weeks ago.
I know, man. It's a beautiful thing. Totally.
I still have a position, the TZA.
Okay, so let's take a look at it. So the TZA is the 300% inverse correlation, folks. It's the bear of the Russell 2000, the small cap. Now, anything and everything you'd like to know about the direction shares, the leverage ETF products, folks, come over to our website at TFNN, and you're going to see going right across the front, you'll see ETFs. Hit that. There's a couple white papers there that explain the leverage, how they compound on the way up and get defensive on the way down in their daily investment vehicles. What we had out here today with the TZA is went into that swing point, had juice behind it. That's 100% move or move. What you could do here, depending on how you could take some bread off. I mean, I think this TZA now wants to back down to, 1727. Okay, so the shorter term is that it wants to back down. The longer term that, it wants to blow away the swing point because it pushed into the swing point today with volume,
Yep.
So that could be, let's see, if it's an ABC up, it gets 1435, 18, so it's 450. Get you 1960. Yeah, it's $20. That's the first target. If we go over to the IWM, that would be the correspondence on the bull side. You can see what the IWM did. I don't see a big bounce out here. That's the other side of it, Kim. You have a decent trade because the small caps are fighting the NASDAQ 100 to be the weakest.
Yeah.
But what you did have today is that, you got below the swing point, had lighter volume, so that's saying, hey, you're going to get a bounce. So the IWM could bounce from 110.13 to 111.68. It just depends on how, you want to trade this TZA, meaning, because what you don't want to see happen, of course, is a market that is just bouncing back and forth, holding on to one of these leveraged products.
No, I got my stop below 1665,
Okay.
Yep.
Oh, that's good. I got it. Okay. So your last low 2 to 3 days ago was 1662. That's cool. That's cool. Yeah.
So I'll just keep holding on to that, see what the market do in the next couple of days.
No, that'll be a good one because if the market, so watch this, folks. We're so close to testing this high right here. I suspect that we're going to have it on Friday. The high that I'm looking for, and that's what I think the market's waiting for, right now is only, it's only 87. Yeah, it's only 20 points away. Well, 20 points is a lot, S&P points. It's 20 points away. We're at 1878. That test is 1897.28. The divergence that we have is pretty intense, meaning that the stocks, folks, when the S&P is still at a high, the Dow is still at a high, there are stocks, there's a lot of stocks that are down 25 to 30%. And, I've seen this happen before, and what tends to happen is this, folks, is that today's May 7th, all the statements from the broker-dealer industry, will basically, if you look at them online, they're already out. If you wait for them to get to the house, you'll basically have them the next few days. And what I've seen happen before is this, is that people, there's plenty of 401k investors that don't pay attention to the market every day, and they shouldn't, okay? But what does happen is this. And, the CBS News, NBC News at night says, the Dow's at another high, we're at the highs. Then all of a sudden they get their statement and say, hey, hold it, what's wrong? The market's at, the Dow's at a high, the S&P's close to a high, but my statement, I'm either down or I'm flat. And what that's all about, folks, is that's all about that the Dow itself is only 30 stocks. The S&P, if you just in an S&P fund, that's cool. But guess what? There's plenty of people that are into NASDAQ stocks, into NASDAQ 100 stocks, okay, and have made a fortune on the Amazons of the world, on the Googles of the world. Well, guess what? Those babies are basically, down, and they're down pretty good. Cooking, brother. Have a great one, man. Have a safe one. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, make ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
This is TFNN.